8 to 10 a.m. and you're listening to Salam Media.
We'll be chatting shortly to Hafiz Mohammed Wadi, who's the spokesperson for the South African National Quran Council, and reflecting on the South African National Quran competition that I think you'll find very, very interesting. In the meantime, let's do this. Normally, the markets update happens on a Monday. Today being Tuesday being the first working day of the week is where we start. So with me is Imtiaz Suliman, who's the senior markets executive director and portfolio manager at Sentio Capital Management. Imtiaz, as always, good chatting to you. Assalamu alaikum.
Walaikum salam, Ashraf.
Okay, right. You want to pick up on some of the big issues in the marketplace over the last couple of days and today?
Yeah, sure. I think what we're going to see this week is the release of the consumer price inflation data from the Reserve Bank. And what it will show is that inflation is certainly on an uptrend and could likely breach the 6% upper target of the Reserve Bank. What that means is that we could see interest rates increase at a faster pace as central banks try and grapple and deal with the inflationary surge that we see. And this is driven by oil prices, which are up significantly since the COVID lows, and this is exacerbated by the Chinese lockdowns and some of the supply side disruptions that we're seeing in the likes of Libya.
And from a South African perspective, I'm just thinking that means interest rates going up. Yeah?
Yeah, definitely. I think it's going to be more expensive for consumers to service the debt that they do have, and we will see interest rates rise. And we've got multiple inflationary pressures at the moment. As I mentioned, oil is one. Yeah. The second one is the Russia-Ukraine crisis, which is putting pressure on food prices, specifically wheat, which is also increasing at a rapid pace.
Tell you what, when petrol prices go up, we're always concerned, and we know it spiked dramatically in the last couple of weeks because of what's happened between Ukraine and Russia. You have a thought on where we're heading with oil prices once again?
Yeah, in the short term, there's lots of supply side disruptions, as I mentioned. I think it's going to be a very tight supply side market. One is we have geopolitical tensions around the globe. Second, we've had massive underinvestment in the oil space, and this is driven by the move towards ESG, environmental, social, and governance issues, which has put pressure on companies investing in these so-called dirty fuels. And what we're seeing now is a very tight supply side market, and that's why the oil price is above $100 a barrel. So in the short term, I think we're going to see a continuation of a tight supply market with higher prices.
Okay, and any thoughts on the U.S. company earnings and how that impacts on us, perhaps?
Yeah, I think that's going to be very key with quarterly season as we enter the reporting season in the U.S. economy. And why it's key is because the company's reporting will give a good indication of how they're dealing with inflationary pressures and where they can pass on these inflationary pressures to the consumer. So, if they aren't able to pass on these price increases to the consumer, you will see company margins coming under pressure, which will put pressure on the share prices of these companies. But all indications are that the U.S. consumer is in a healthier space than the rest of the world, and they are absorbing some of these price increases. So we should see earnings continuing to grow, which would be supportive of equity prices in the short term.
Okay, and that's where we're going to leave it. Thank you for your time, as always. I'm sure we'll chat next week. Imtiaz, thank you for your time.
Okay. Thank you.
Imtiaz Suliman, the executive director at the portfolio manager at Sentio Capital Management. Next up, Ashraf Gangrakar, who's pretty fired up. We'll find out why.